Hope everyone's doing well today. I'm making this video to review a swing trade I took from yesterday. Um, yeah, I'm just gonna get right into it. This is also not financial advice. I just wanted to get that out the way as well. And yeah, so back to the trade I took. So yesterday was what's today? Wednesday. So yesterday was Tuesday. So I tried trading this day, but I didn't really like the way like price was moving. And I made a trade on Nvidia, but I lost $60. So I was like, I'm just gonna wait till the end of the day what happens, because there was a demand imbalance here, and I pretty much didn't. I forgot it was there for a minute because I I'm not gonna lie, I had my box all the way here, and then I was just looking at this the whole day, so I forgot to really extend it. And I mean, but it's fine, that shit like that happens. So I realized around 1 o'clock, 12:30, I noticed that I looked a little like I make sure to look at the bigger picture, right? So I realized like, oh, like this hit off demand imbalance right here. And then I saw the reaction it had. I'm like, okay, I had a good amount of buy orders filling up, getting filled. So I was like, all right, good imbalance there. And then pretty much I noticed that by looking at the bigger picture as well, that what's really happening here is that it's creating a balance here as well, as you can see, because price and pre-market today came back in here just to fill out those buy orders that were left when the origin of the imbalance formed, right? And what these large candles do, what it really means, it's really just the market maker filling out orders. That's all it is. That's all it is. That sometimes you'll see like large candles like this, like right here. It's just all to fill out these little buy orders, the little sell orders for when there's a top wick, right? And I got in my position at the end of the day, like right at like 12:59. I entered like right here, and then I swung it because my price target initially was around like 416, because I noticed that it created an imbalance right here. But the thing is, when you look at the bigger picture, right? You see that I actually didn't catch this supply imbalance along when it first hit it, like on Monday, I think. I hit it on Monday, I believe. I actually didn't catch it on Monday, and I actually traded that day, and I lost like $30 because I tried doing calls, and I just got in where the risk was really low, because I had a feeling like the demand I was playing wasn't really the best. And after I looked, I was like, oh shoot, like this literally his supply. I'm tripping. I don't know why I should have played this instead. So then I just the rest of the day on Monday, I just let it be and just watch what happened. And then so pretty much got in here. I got at the 414 calls. I got 414 calls. And then today, I did not expect this this move to happen, to gap up so much. But I knew if it did, it would just continue. It would try to fill out the sell orders at the opening, and then try to come back to fill even more right here. So I exited right at the opening, right there. And yeah, that's pretty much the trade I took. I made 140%. I did the math. I thought it was 120, but it was actually 140. So pretty good. Something I wanted to go over was the 1 minute large candle imbalances and aligning demand imbalances with related markets, and the illusion of trends. So you can see I have this trend line here, and I really have it to like just to give me even more structure. But looking at it, I realized like I could see why people want to buy at trend lines. Like I understand because I used to think like, oh, buy off the trend, trend breaks, blah blah blah. But that's not really like, there's no longevity in that, right? So I took a look at it, and I realized like why people try to buy at trends. There's a demand imbalance here, and price hit here, creating a higher high, right? A hidden area where the trend line is at, and then boom. So I believe from what it looks like to me, that looks like the illusion of trends. Because look, you have also here price hitting this demand imbalance. It creates a trend, which creates the illusion of, oh, I need to buy at this trend. This is where it's gonna come back up. And it may work, but there's no high probability in that, in my opinion, because from experience, I've lost money doing that. And, that's when I was first learning. And now that I have like an even more grasp on demand imbalance and supply, I could see that, like, dang, it's crazy how um, the media tries to like bring trends, like, oh, buy on the trend line. So that's the reason why also like there's no need to pay for so much in like in charting apps, simply because um there's no need for all these. I don't even use indicators. I just have volume here, right? I've said that in my previous videos, I think, but I say it in every video because it's something that like speaks out to me a lot. That's I'm really like strong about, because it's not necessary to have all these indicators, right? I still have them here. I don't know why. I should probably delete them. I'll delete them right now, actually. But yeah. So yeah, it's pretty much a trade. Oh, and then the 1 minute imbalances. So look, as you can see here, there's like there's hard to spot a demand zone here, right? Let me take this pink box away. Let me just take it out for a minute. Right? It's hard to spot one here. Let me take this one out too. So you're like, where the hell do I buy? Where the hell do I buy? Where the hell do I sell? In this case, like with the fudge, where the hell do I, where's the imbalance at? I don't know where the hell the imbalance is. So in this case, because price came back up here and broke this area of structure, which is this supply imbalance, it worked for a little bit simply because the market hasn't been having increasing demand. So I've learned from this supply. It's called the Supply and Demand Trading Book. It's by Frank Miller, I believe that's the author. Might be wrong on that, but so what happens is on these little, see where the little how to say, the separation of each candle is on these like 1 minute time frames, especially on days like this where the price just like shoots up out of nowhere. I don't know if you've ever experienced this, but when you try buying on a breakout, right, or when you try buying when price is increasing on large candlesticks, you try to put a buy order here, and it's really just like there's like a really really low chance of your order getting filled. So it's most likely not going to get filled. But when the market like stalls out like this too, this is also the market stalling out. I just realized that right now, because it's taking time for price to enter into that new time, right, and fill out those buy orders that are getting right here. If you buy here, your buy order is going to get filled automatically. Like it's really like structured for market makers to do that. So what happens is people try to buy here, or institutions try to buy here alongside all the other buy orders that are sitting there, and creates an imbalance right above it or right near it. So here is like a really like weird area where you kind of have to make the demand imbalance, the demand like zone for you to enter like a little bigger, simply because it could range from anywhere, right? It can range from here, it can range from here, it can range right here. So your safe bet is like, there's in the book that by Supply and Demand Trading, it shows that there's like a way to do that. It's like half risk, full risk, whatever you're comfortable with. So yeah, that's the reason why like you may think like, oh, what the hell, like this is out of nowhere. Like really what's happening is that there's just a bunch of buy orders waiting there too. That's also the imbalance. Make this screen. And yeah, that's all I wanted to go over today. And thank you. Have a nice day.